Hey investors, back with another video today, and today guys I wanted to talk to you about the little pop that we had and what potentially could happen here in the coming future. A lot of people are kind of excited that we had a little bit of a run up today, and I just see it as potentially what some people call a dead cat bounce. So what is a dead cat bounce? And what does it mean? So a dead cat bounce is kind of this interesting saying that's been put on by analysts that even a cat will bounce if dropped from a high enough position, which is absolutely horrible, but it's kind of true. And kind of what I think might be happening in the stock market right now is we could have this situation. This looks kind of similar to the S&P 500, and what we had here is we had the run up in January, followed by the sell off, and then we had a little bit of a pop. And what we could have now is another fall back. And we're getting a little bit of a pop and a little bit of this sideways action going on. I'm a little concerned as a whole because the bears are hungry, and I think a lot of people are trying to push the stock market down a little bit. And I mean, it's been really overheated for a really long time, so that's something to be concerned about. Also, something that concerns me, it seems like, and maybe I'm wrong here, every time unemployment levels get really low, we seem to have some kind of stock market problems. And currently unemployment levels seem to be getting pretty low. We still have a little ways to go, so we have maybe a little bit of time left, and you could see still a bull run for this year. But right now we're fighting pretty hard to just keep things rolling. Doesn't mean that there's not good buys right now. I still think that there's a lot of good buys in stocks that are in the market. One of the ones that kind of fell down into the area where I would personally like to purchase some stocks from it was Cirrus Logic. I don't know if you know that company or you know anything about it, but I just wanted to throw it out there. I believe they're in a lot of Apple phones, and they also have a lot of patents. So I just see that they're just not going anywhere. A little bit of company facts that's based upon their webpage. Obviously, they're going to put the best stuff and why it would be good and invest into this company. But they also put all the information on why they would be a high risk as far as a risky investment as well. So who we are. We provide high precision analog and digital signal processing components and associated software for audio and voice applications. As the leading supplier of the complete audio signal chain from capture to playback, Cirrus Logic is uniquely positioned to capitalize on these rapidly growing demand for differentiating audio and voice technologies. Wow. Okay, Windows. And they have over 2,985 pending and issued patents worldwide, which is pretty interesting. That's quite a few amount of patents. Who knows of how many of those are really good patents, but yeah, that's kind of an interesting fact about the company. Let's look a little bit more into the stock. So its price a long time ago, back in 2007 and back in 2009, was really cheap. As you can see, the price was like $5, and in 2008 and 2009, it dropped down to $2.68. Concerning per share was really low, so of course the PE ratio is astronomically high. The stock as a whole took a little bit of a hit. But it's been a little while since we've seen the PE ratio on this stock come down to a level that's kind of what it is at right now. As of April 2nd, 2018, it is at 9.59. As you can see here, I mean, you've got some PE ratios where it's a little bit lower. Like this would be a great point to buy Cirrus Logic back in 2011, and had a nice little run up to $38.39, which is kind of where this point is right now. You've got this from 2012 to like right here. This is kind of where the same price is from its high point. So it's had a bit of a falling back on the stock as a whole, and its earning per share is obviously came down a little bit too, and that's not a really a good thing. But I kind of want to go into a little bit more why it was a little bit of a darling of Wall Street a little bit, and just because a lot of people really like Apple phones. They're the like pretty much the only way that this company would stay afloat is if they continue to get into Apple or Samsung. And that's something that's kind of a risky investment in itself, but it kind of comes down to an attractive PE ratio. As you can see, it's down to the 9.59 area, so this is pretty on the cheap side, in my opinion, for the stock. As you can see in the past, it's it's had like better days. 2013 at this time would have been a pretty good buy too at $17.36. Let's look a little bit further in. So their revenue and income, it's fallen down a little bit. As you can see back in these last little quarters, it's had a bit of a slump, which obviously when you see a stock, you want to have like a continued uptrend that's really good, and you get a little bit of a slumping that comes on right here and from operations as well. So that's a little bit of a concerning thing. But overall, it's not detrimental. It's that its revenue hasn't fallen off the face of the earth and dropped down to like less than $1 billion in over a night. So that's kind of good. Let's look at the balance sheet a little bit. As you can see, this is a pretty nice gradual or not so gradual trend upwards. They have just great clean balance sheet, next to no liabilities versus assets, which is something that I really like to see. And that's something I really like in a business model as a whole. So this is kind of an interesting turn of events that the stock has taken such a dive over the past month. It just doesn't quite make sense to me, but maybe some people have some more knowledge when it comes to the stock and why it's dropping off the face of the planet and it has such a clean balance sheet. So let's go a little bit into the cash flow, and maybe that's a problem there. Well, as you can see, we've got a little bit of a slumpage that's happening right here, and we've got some problems that's kind of going right here. As you can see, they've did quite a bit on investing and financing, and it's gradually ramped up a little bit. But overall, it's something that isn't really scaring me. If this would have fallen down astronomically within a quick amount of time, then this would have kind of scared me away from the stock. But stocks go up, they come down a little bit, they go up, they come down, and cash flow sometimes happens like that too. And it's still got a pretty decent cash flow as long as they keep selling iPhones. I think that this company will be doing pretty solid, and at a price point that is pretty cheap. What I think for the stock right now, I think it's a great investment. But don't take my word for it. Do your own research, learn about the stock for yourself. It could still go even further. If we have a little bit more of a downtrend, this stock could take a little bit more of a dip. So I just wanted to talk to you guys about that today in the market. We had a nice little run up. We'll see how long this lasts. See if we get a little bit more of a run up coming up here in the next few weeks. See if this continues, and see if we can go back to a bull market that's running up for the rest of the year. It'll be really interesting to see if that happens. If it doesn't happen and we get a little bit of the dead cat bounce, well, I mean, it could happen, guys. And I've been trying to warn a lot of people about investing into a lot of stocks that are really, overpriced, and they have been for a little while. And if you noticed what Warren Buffett is doing, he's been stockpiling a lot of cash since 2014. Why would you stockpile a lot of cash unless you're getting ready to buy things at a very cheap price? And, I think he's been looking for buying opportunities. He's probably picked up some stocks here, little bits here and there along the way on these dips, but I think he hasn't really moved too heavy into one sector or anything because he's looking for a really good discount. If I was Warren Buffett, that's what I would be doing, and if I had that obscene sum of cash sitting on the side. So that's something that you guys should think about. why would one of the greatest or supposedly greatest investors of all time keep his money on the side right now when the market is, kind of doing this like dippy choppy action? And I think it's because, we could be heading towards what would be potentially a bear market, a recession. Interest rates are rising. Who knows if they'll continue to rise? It might not happen. Who knows what could go on in politics? And I think that's why it's creating a lot of choppability in the market as a whole. Which direction is the market going as a whole? And we have a lot of potential catalysts coming with earnings for this month. This month will produce a lot of companies' earnings. If those fall short, we're going to be in pretty big trouble. If some of these companies are not doing really well on their expected EPS, and they're not really doing really well on everything, then you could see a bear market turn real quick, and you can see another probably 20% sell off. So keep some cash on hand. I always think that that's a really good investment strategy, is never ever being fully in a market, never fully having all your assets into one thing. Some of the wealthiest people in the world, they have multiple income streams. So if you were a YouTuber, I wouldn't recommend just doing just YouTube videos. If you were somebody who works a full-time job, I wouldn't recommend just having a full-time job as your source of income if you're trying to get wealthy, because that just doesn't work typically. You have to have multiple income sources and cash flow. And I think that's really important, is a lot of people can't distinguish the difference between an asset and a liability, and they really put themselves in a lot of big traps. I'm going to do, hopefully here in the next month or so, I'm going to be doing a better how-to training guide in comparison to some of my older videos when I first started doing videos. And we'll kind of go from there in a little bit better depth on how to manage your finances and take control over your life in general. And hopefully it'll be a great learning and growing experience for the both of us. So like if you like this video today, guys. Dislike if you dislike the video. And if you really like the video, guys, please subscribe and have a great day.